Boom, baby, we're alive. What up, boys? Welcome to the Tokyo Crypto Show, episode 175, established in 2019. We're cranking out the crypto goods since you saw Bitcoin here at like sub 3,000. You would think that the whole market is on fire. People are jumping off the buildings and everything's in total despair. But Ethereum only dumped 10%, which is good because after hitting some relative all-time highs, compared to what it has done in the past, those numbers were pretty unheard of. We haven't seen Ethereum this high since December of 2021. Now, institutions are still buying, and we're going to talk about what's happening right now. I'm here with Alex and Elias. What's up, guys?
Yo. How we
Everything
doing?
all right?
Yes. Steve is in backstage, guys. Steve is traveling across Europe, living his best life. And oh shit, don't want to do that. Oh, I almost hit that stream. Okay. Steve is dropping some remote help for people here, and we are going to be dropping some serious crypto alpha for you folks out home who are watching. We appreciate everybody tuning in. And we'll just jump right into it. Alex, you just want to take it off?
Yeah, let's do it. So last week we were saying over and over again, we feel good, and that's the only signal of a top that we have around. And this whole week I've been searching, but digging through shit, watching videos, reading books, and still there is nothing going on that's like, fuck, get out, it's all finished. So let's go through that. We'll jump in and have a look. So the broad thing here is our monthly chart, and it's still looking fine. I will say, though, we're turning red, but we are still above 50% of the previous candle, and the 50% point is very, very important in general. So if we were to break down, go monthly down, then that probably means we're going to have more months down. So and this is currently what, 105? Let's have a look. The low, 105, 130. So I don't see this month us breaking down there, because if we did, then that means all of a sudden we're going to be down or sideways and dicking around. It'll take time, basically. If we do technical damage like that on the chart, we'll have to spend a month or two just doing absolutely nothing, which then would take us all the way to October, and then therefore our sort of 20th to the 30th of October kind of top frame, we would have to suddenly shift that because we just simply wouldn't have enough time. Now, with that said, we're still looking fine. We're still looking good. Fear and greed's at 50, which is generally where we stop. Everyone gets very, very sad and depressed. And when we look at how price has been going, it's actually not, we're still in this range that we sort of kicked off from the 10th of July. So 2-month range. We pierced up, highest close ever, new all-time high. Everything's really lovely and fun. This was the day we did the show, like at the start of this candle. We were here last week, and we're like, oh, okay, looking good. And then vomit down. Everyone's super sad, but have a look. We have just, we didn't even reach the 111,700 roughly. How we're looking here. This is 112 on this chart. So breaking down below there would probably mean, well, at the end of a 60-day cycle, we might be all the way back down here. But like I said, if we do that, then we will have gone monthly down. If we go monthly down, then that means weekly cycle finished, which means next month should also be down, or sideways, which means we don't really have enough time to get much further than 125,000 in October. So at the moment, everything is still looking fine for October. If we look at our previous weekly cycles that I've overlaid here, white, red, blue. So blue was the last one, yellow was the one beforehand, and the red one was the one beforehand then. So we've had 3 weekly cycles so far, the last major ones anyways, in the rising portion of the bull market. So if we have a look, if we just overlay them here, the highs, so 22nd of September, if we match the last one, the one before that, not until the 10th of October, or it's sort of double topped here, so not until December. And the red one, this was the one coming out of the bear market, so it's a bit less explosive. But even this one was still in September to November. So for us to have peaked the weekly cycle here and all finished, and that's it. It is very, very early. And as I brought up in the last show about, well, if we were to mirror the exact same amount of days between the halving, or the low to the halving, and then the halving to the final top, we still if we were to take the earlier frame on that, that still puts us in September. So for this to be a top, once again, it's just we've been looking around. Did we have crazy retail? No. Did we have crazy mania? No. Did we have the news outlets pumping like, oh, buy, crypto's going on forever, or at least crypto's peaking next year? No. We didn't have any of that. Did we have crazy on-chain activity? No. Did we, like, there's just nothing. Just nothing. So this is wonderful. New all-time high. Good news. So now we're all the way back down here, but back down here is not really anything crazy. We haven't technically broken down. You know, there is a saying, don't assume the trend has changed until a low on the 3-day chart has broken. And our low on the 3-day chart is right here at, see this one, 111,897. We haven't broken it. So you can't assume, in the absence of all, like there's literally nothing that's saying market is done. And then the trend, you cannot say the trend has changed because we're still, with this 3-day low still intact. So there's literally, like, just to get out, you're getting out on a vibe. You're not getting out on literally any metric. So that makes it very hard to just, to call this anything but business as usual. So we'll see what happens. But even if we break this low, that doesn't mean panic and get out. You could, but it means we might go lower, then we'll get a lower top, and then it'll all fall on the ass. So you just kind of, we just sit tight, basically. As John brought up, Ethereum, like, whoa, look at this crazy run, whoa, and then drop. Does it look scary? Absolutely not. We just zoom out, and you can see, and maybe I'll bring the weekly so we can sort of compress it a bit. We had one, sort of a second attempt, but 2, 3. So this is 3 or 4 attempts, breakthrough. And what do? We came back and we tested the breakout zone. That is literally like the textbook experience, what you'd expect. Yesterday, when I looked at the chart and Ethereum was down at like $4,050, and you're like, holy shit, that seems like a lot. But when you sit here and go, like I said last week, instead of looking in the 4,000s, put it in like the 10s. So it's like, oh, I went from $43 to $40.50. And you suddenly go, oh, that's actually not that big a deal. So like John said, from the actual top, we've only dropped like 10%. Boom. Well, the breakout zone was down here, and we, if you were watching, you would have just aped in here. And I actually was looking, is this a good opportunity to swap some Solana perhaps for Ethereum? Because, once again, everything, all the technical stuff is still telling us it's all looking good. And Ethereum should retrace back here before going back up. But I'll bring it up in a sec. But essentially, the Solana Ethereum chart has a good bottom sitting there on it. So there is a good chance that from now on, Solana and Ethereum should be matching. Or Ethereum shouldn't really do too crazy and outpacing. Now, this is my bet. So, do what you like. But, we're just sort of chilling out here. So I was like, oh, it's not worth really doing a big swap because it could just go back up. But then I could just be that guy who's sitting there looking at, this chart is sort of the Ethereum chart of all the Ethereum Bitcoin 2.0 when it was just like, it could be a bottom. But I just see this late in the cycle, we're only expecting, like, the top could literally be 60 days away. So with that, I'm happy with my positions, but it all comes down to what everyone's, their own personal thing. For Solana, we did get up here. We got above this price here, 206. So I was happy about that. And we've come back a bit, but once again, we're still making high lows. So everything's fine. At least right now, everything is oversold. That's what you can say at the very least. Bitcoin dominance still jumping down. See, some people, they just have all their charts on the side here, whereas I just have a zillion tabs open at all times. But you see Bitcoin dominance still coming down. Hasn't had a big reversal, so it's probably top for the cycle, like we've said. This is the Australian stock market, all-time highs. The S&P is also right up there. Things are still going really well. And so I would just say, overall, this is just a bit of a shock. The market has been a bit too emotional. Technically, everything's still up and fine. If you've been watching any other people, like the Invest Answers people, you've been reading any books or doing any sort of research, you probably, like myself, couldn't really find anything to indicate that there's actually anything wrong at all. So overall, that's where we stand, essentially. We're in a similar point last week. Obviously, it's come down a little bit, but it hasn't come down a dramatic amount. So, we just got to sit tight. This is what we've got to weather through. The weekly cycle also has only done about 67% up. In the previous ones, I've written it down here, 107%, 195%, 120%. We've only done 67%. So it doesn't make sense for like a final blow-off sort of cycle to actually be almost half that of a previous one. So even if this is some sort of early weekly cycle and we're going to move into the last one to top out, then that means the downside is going to be a lot less because the upside was a lot less. So there's too many things that are telling us nothing's changed. Just chill, sit tight. And if you find yourself getting a bit too frantic or freaking out, then you might just have to take a step back or reevaluate your plan or read what you said you were going to do. Because we've been saying for the longest time, sort of top in October. And I was happy for there to be a top in August if we were at $146,000, which we have not gotten anywhere near. So, yeah, we just chill out. We won't. Yeah.
Good stuff, man. Elias, you've been traveling the world, living your best life, like Steve.
Yep.
Talk to us. What do you see? What are your thoughts about everything, given this position that we are in this bull market currently? Where do you just see everything?
Yep. I basically more or less align with what Alex said, with a few smaller points. So I've taken the top indicators we used before, and I'll share my screen here. And I've basically made them more aggressive, so they would trigger faster, so we get an earlier warning, and gave them something actionable. I'm not saying everyone should use this. This is just what I'm using to stay safe and basically not get liquidated with some borrow positions on Bitcoin. So this is, if you've been watching the show, you probably know this chart more or less. This is basically just the timing from each low or from each market top, the bear market of pretty much exactly 1 year, except for this one in 2014. But then we had 364 days from the top to the bottom around 2018, and we had exactly the same around 2022. And for the bull markets, we can also put the halving in the middle, and if you go from the bottom to the top, we get around 152 weeks each time. And if we extrapolate this to the current bull market, we would get to a top around October 2025 timing wise. And if we take the percentage gains we had, so 12K or nearly 13,000% here, then around 2,000% in the last cycle, then we'd get, just by extrapolating the diminishing returns, to around 1,000% gain in this cycle, which started at the low in 2022. And this would put us right at around 173K. And of course, this is just a prediction or a theory based on that we see a continuation of the 4-year cycles playing out as we've seen it in the past. And the top indicators I'm using here is basically, for the blue one first, this is just a straight horizontal line from the last cycle top going over there. And then we have the 225 EMA, so basically moving average. And when it crosses the horizontal line from below, we get early warning for the top. And this worked in 2017. Worked pretty well. It was about 3 weeks accurate. And we had the same story in 2021, where it was about 4 to 4.5 weeks accurate. But we have one important change that we've seen over the history of of the Bitcoin price, which is that we had more and more institutions coming in and the market cap of Bitcoin increasing, which led to the actual volatility. So how much price change in percent we have over a certain amount of time decreasing. So in the last cycle, we had daily jumps of or weekly jumps of something like from 8K to a low of 4K. So a minus 50% jump. And something like that, we really haven't seen it yet in this cycle. And this is most likely due to big institutions holding Bitcoin with their ETFs and everything. And the spikes like this, or spikes to the top, are also affecting how fast the top indicators trigger. So to basically accommodate for this, we'd have to make the top indicators more aggressive. So in case we have a slow bleed up to a top, we actually see them trigger before and warn us before the top actually happens. So for this reason, we can take the 225 EMA and put it to something like 180 here to have it trigger faster. We could do this. This would give us more security, and you can also put this in. You can just draw a horizontal line from the last top at around 69K, and then put in the normal EMA. Just click on indicators here and search for EMA, and you get basically the same indicator. But we can also leave it at 225 and just calculate where the Bitcoin price would have to go if the timing for the top is correct around October this year or even November this year. And for this moving average to actually cross the last top at 69K, so there's around a 12K delta or price difference from the 57K where it is right now. The Bitcoin price, and for the date of between October this year and November this year, the price would have to go somewhere between 225K and 170K USD for Bitcoin within October to November. So this is something that could happen. This is just an approximation. And since we can't really count on approximations, I've put in basically 3 top indicators I will use to exit my Bitcoin position and not risk any big losses. And if you go through them by number, the first one is just the long-term top based on the trend continuation pattern of 1000% based on diminishing returns from the last cycles. I put in here. And so personally, if we hit 173K, regardless of where we are timing-wise, I will put in a stop loss on a centralized exchange. And a stop loss is just price goes above price, then you put it in, and if the price hits the price of the stop loss you put in again, it automatically sells. And you can also pull this up with yourself, with your position. You only have to make sure that you don't do what most people using stop losses for the first time will do, which is if price actually nearly hits the stop loss, they'll remove it and basically say, yeah, it will go up again, it will go up again, and then they pull the stop loss down and down and down until they don't actually get into the position and take their profit anymore and go into the bear market without taking their profit. So this is my first stop. To stay safe is just at 173K. I'll put in a stop loss. If it hits, and I'm out. The second exit area I will do is basically as soon as this 225 EMA, and this is on the weekly, not on the daily, 225 weeks EMA crosses this horizontal line from the last all-time high. This would most likely be in this area between October and November this year, and between 225k Bitcoin and 173k Bitcoin. If Bitcoin goes anywhere through this ellipse or through this circle, I'll just take profit. So I'll just take the whole position and sell it, except for maybe a bit. And the third exit strategy I'll do is basically that I'll wait till October, and because we don't know for sure what will actually happen with TradFi and how it will maybe pump or extend the pump of the bull market through after October, I'll go and start around October 20th or mid-October and just DCA out. So I'll take the time frame from October or mid-October till nearly Christmas, and just say, okay, I have around 90 days, and I will sell a portion of all my holdings throughout those 90 days and just dollar cost average out of my position. So whatever hits first, I'll do the strategy. If a second one hits, so if you go over this price, the stop loss is in, and we hit the date, I'll still start dollar cost averaging out of my position, even if you're higher. And if we get into this zone, I'll just sell. And that's just my strategy to stay safe.
Yeah.
In regards to long term, what will happen? Just on the chart, we'll have most likely the rate cuts around September, so here, which could give us a nice pump. So if that happens, we could see some FOMO in the market, actual retail coming back in, because there's a lot of fear around the retail crowd right now, especially if you look at places like crypto Twitter, with a lot of people predicting something like 70k Bitcoin next month. So if they actually start to put money down, we might, in my opinion, see a pump here, and those prices get realistic again. But if we don't get up to 170k plus, and we go over this October or mid to end of October time frame or deadline, basically, I'll start DCAing out anyways. And if price goes up after that, I'll be happy. If price goes down, I'll be happy too, because I started exiting early enough and won't exit in a loss, basically. As for the bear market, which I think Steve was also supplying some information on, is basically, I don't think we'll see the same thing that we saw the last cycles, with a clear downturn, because of what's happening in the TradFi area. In the past, all the Bitcoin pumps and the price action we saw was mainly fueled by exchanges and by retail investors. And with the ETFs and the institutions coming in, they more or less got irrelevant. So if you're looking at crypto Twitter for the narrative of if people are buying or selling Bitcoin right now, I don't think it's actually useful. I think it's only useful if you're looking for information on the TradFi markets or what's happening with the really big exchanges like Coinbase. So to summarize this, I basically think that if we see a top in Bitcoin and crypto, we might see a bear market at the beginning of 2026, or even in early Q4 this year. But if TradFi actually starts pumping because of some measures the US government takes, or because USD-based stablecoins get really popular globally, and we see a lot of liquidity coming into crypto, we might only have a really short dump at the start of 2026, and then start bleeding up again. Especially this could be the case if big companies or institutions see Bitcoin as a more a safe haven asset because it has been less volatile than big tech stocks over the last months, and they buy it just to be safe, or if the whole market is booming for some reason and Bitcoin is just going up with everything else. And that's basically my summary for Bitcoin.
It's beautiful. It's really like sobering. We really don't want to be doing any kind of like, hopium. Elias, you could just cancel the sharing on your end, buddy. Yeah, we just don't want to be painting any unnecessary hopium and stuff like that, because that's what gets you burned. And that's the number one objective that we are trying to stop. That's why we're having this conversation with you guys now. I think unanimously, guys, on the panel, we can say pretty much from November 1st onwards, if you're in the game, you're risking and you're gambling at this point. I think we can confidently say that.
Yep.
Yeah.
Could go very well if we see nice rate cuts and nothing bad happening globally.
Yeah.
Then it could be the best gains of your life, but on the other side, the risk is just extremely high. So
Yeah.
you could just take profits or DCA out and take a small portion of your portfolio to feed your gambling addiction.
Yeah.
But apart from this, I wouldn't go all in on some meme coin and hope that retail is coming back, because people don't have any money left right now.
I feel personally attacked by that statement, Elias.
That's okay.
Real quick, gentleman here says, y'all are still bearish on Ethereum. It's back to its all-time high almost, and Bitcoin dominance is still high. So take a look at last week's episode. We actually have been backtracking because we were making fun of Ethereum because it was doing really bad for, I would say, 80 to not even like 95% of the bull market. It just started moving last month.
Yeah.
So Ethereum has been, pretty abysmal in its performance. So we are only partial to the profits. And when the chart Ethereum BTC is just bleeding out, we objectively have to communicate this data to you guys that it's not doing what it should be doing in the most profitable bull run we've had in this time so far, because we have been seeing a lot of institutions buying. And keep in mind, this all started in October 2023. Remember, anytime you see a crypto influencer talking about, well, we could see the charts started moving in October 2023, it's nothing to do with the charts. It's because the Cointelegraph intern leaked accidentally that the ETFs were going to be approved. And once that leaked, everybody started buying. People were massively buying. And, once I noticed that personally, Elias and I have been working together consistently on that chart since the bear market of 2022. A lot of you guys don't know that. The inception of this show was me and Elias looking at how we dropped the ball in the last bull run. And we're like, we can't let this happen again. And we came up with a really great plan, and it worked out swimmingly. And here we are. So we are in the end game, guys. Like, I want to make this very evident that we are in the end game, and you need to be sober when you are investing your money, because you will lose it. Statistically speaking, you are going to lose your money. If you're a new crypto beginner and you're not listening to us and not following the clear, there's no hopium here. No, like this founder is such an alpha male. There's none of that. It's just clear, objective data that we've been communicating here on the Tokyo Crypto Show Season 2. Anything you guys want to add to that? Feel free. It's going to have more of an open conversation.
Yep.
I popped in the chat. Oh, yeah. Well, you go, Elias. You go.
Okay, sorry. I just wanted to answer a quick question or a statement from Benjamin. He said Pi cycle top indicator is sitting at 185K right now. So I'm not that sure that the Pi cycle top indicator is still valid, as we don't have enough volatility to make it cross the slower MA. So basically, with the Pi cycle top indicator, we have, at least in the configuration I use on TradingView, we have a 365-day, so a 1 year moving average for the slower one, which is right now at the top. and we have a 111-day moving average for the faster one. The whole game is that the slower one is like this, and the faster one is coming up when Bitcoin pumps. And if they cross, you have a top signal. This worked well in the last cycle and the cycle before. But right now, as Benjamin says, it's sitting at 185K. And my top is 173K. Because we have less volatility, I'd maybe put for Bitcoin, we have something like 40 to 50% less volatility than last cycle. So based on that, I'd also decrease the MA, the faster MA from something like 111 days to something like 70 days, and then see if it actually hits. If we really pump high, and it's true, it hasn't been invalidated yet, but if we really pump high and we hit the pi cycle top with something like a fast MA of 73 days, then we have the first warning. If we have the classic pi cycle top indicator with the faster MA of 111 days cross the slow MA, because we are pumping so much, then we have like the red alert warning. And that's basically how I'd use it. But I wouldn't wait for the pi cycle top to trigger before selling anything. I think that's, at least personally, that's just too risky in case we don't trigger it at all because we don't pump that far up.
Good stuff. So
I'm not exactly sure that we'll get. I'd love to get into the 170s, but I'm still thinking, like, I'm going in my mind, like 146 is the big ceiling that we'd have to smash through. So I can just see it stalling there at least. And with where we're at, I just go, if we're going to drop down now, then there's kind of not enough time. Like if we're going down in September to 100 grand before then mooning, I just don't see like 1 month is enough time to get from 100 to like 170. I just like, it'd be nice. And then we also had 5 trillion as sort of 4.9 to 5.2 as a sort of a logical, say, ceiling for total crypto market cap. And last week we were at 4.19, like pretty much 4.2. And I go, we got $800 billion that can go in. And even with that, because of the multiplier effect, it's not even $800 billion. So that's good. That means it's a lot easier to get to 5 trillion than than 800 billion. You divide it by, for Bitcoin, it's like 25 times, or Ethereum 25 times, Bitcoin 20 times. So we only need a couple hundred billion only to get to where we've outlined is a big resistance point. And I just sit there and go, well, if we've got 800 billion to sort of sift into various market caps before we hit a big resistance, like we're going to have to go to like 7.5 trillion to get to sort of if Bitcoin's at 170 something, then I would think, well, we have to be at like, $8,000, $6,000, $7,000, $8,000 Ethereum. We got to be at $400 Solana, or some people saying 1,200, which I think is ridiculous, but I'd be happy to take that. So I'm just sitting there going, like, we either have to go sideways and then we can zoom, and even then, like 146, that's not far, but like that means it's achievable. But from here, we could do 170, absolutely. But I'm just like, if we're in 100K and it's the start of October and we're sitting there at $100,000, I'm just like, we've got a lot of work to do. That's a hectic month to get to fly. So we'll see. On the Ethereum point, it has been going really well. When I've got my Solana positions and I'm happy with that, and that's because my Solana positions were at like $35. So it's a bit of a different. Like, I'm just in a different sort of, context, because I'm sitting there looking at it going, well, over the 4 years, over 4 years, I only bought one Solana at the time, so that's it. But I'm little wins. You got to celebrate little wins, and so Ethereum has been going really well lately. All it's really done in the context of the last 4 years is kind of make up for lost time, because Solana did make a new all-time high, but Solana also has like 6 to 8% inflation per year. So Solana really adjust, because I did the numbers like way back at the start of the year, and it's like Solana, if we didn't have the inflation, Solana was like over $400 already. So we had to have so much more money pouring in to Solana just to get it back to the all-time high, whereas Ethereum hasn't had that limitation. So people just simply haven't been buying it. And now institutions are buying it, ETFs are buying it, everyone's excited about it, but no one's really using it. It's not like everyone's like, oh my God, yeah, we're getting so much good value out of using the Solana blockchain. We are getting some good stuff on Base. We are getting all the stablecoin stuff coming on. So there is like, oh, maybe something will happen, but no one's really, it's just because people see that the potential for value in a few years' time. In the last 2 months, they've decided that, and they've just been fucking zoom, zoom, zoom. But Ethereum is not some like golden child that zoom. Like Bitcoin was a better buy over Ethereum until recently. If you go on Bitcoin, if you bought Bitcoin at 15K, you're much better off than if you bought Ethereum at 1200K. Oh, sorry, $1,200. So it's really good that Ethereum's doing really good. We want Ethereum to do good because then Solana will do good, BNB will do good, Bitcoin will do good, all the alts will do good. We love that. But don't, it's just like, remember the context. And if you take a step back, you see,
shut up and take my money.
Good, but Ethereum is certainly not this sort of superstar that's just breaking all barriers and, transforming the space. It's sort of doing what it freaking should have done fucking 4 years ago. And so it's just catching up, which is good. And if someone was to buy in and they were bullish for a little while, so far with that push up towards all-time highs, come back to the breakout area, and now we're starting to move our way back up again. It's not a bad time. It's not a bad, you can see sort of an easy logical trade there. And then, you have the stop if it fails and breaks below $4,000 again. So it just all, you got to remember the context and also put that into, when you're listening to what we're saying, think about, well, what's your situation? We might talk about, oh, we love this meme coin or something. Let's put some money into it. But for a lot of people, because I've had conversations with people and their entire portfolio was like $1,000. And it's like, don't what? You don't have like a, what do I need to invest in kind of issue. You've got like you need to earn some more money to kind of put away. And then kind of do those, because the majority is the long term. It's just getting a good entry and then just chilling. And then you trade with a bit and you learn. And the trading is good because then you're paying attention. And then you can make sure that you stick the landing on those big things that are delivering, 80% or more of the result. So, yeah.
Beautiful. Let's, we got Steve. He sent in a report to us. I'm just going to read it off for you guys and I'll kind of give my perspective. He said, producer prices and consumer goods inflation came in hot after the headline about the inflation report. So unfortunately, inflation's back up. Who even knows with the Federal Reserve anyways? Given the fall off in jobs, they're likely just to do a 25 basis point in cut, but not a 50 basis point cut, with more aggressive cuts happening later in the year. The good news is tariffs have had a very limited effect. The inflation is happening aside of tariffs as it existed earlier in the year. So over the long term, with government spending going higher and higher, with tax cuts from the big beautiful bill coming through, rates will needed to be kept. Rate cuts will be needed to keep interest on the debt cheap, and 2026 could show promise as well, according to the Morgan Stanley report. That said, with rate cuts essentially certain in November, mania will be in place with an almost certain drawback in Q1. And I've learned that lesson the hard way. After Q1 and Q2 of 2026, the rest of the year is likely solid. That's from Steve Patchinen from Italy, sending in the report. Steve, we love you. Appreciate you, big guy. So that being said, there's a lot of tension going on with the Federal Reserve. Apparently, like the FBI is now investigating some of these people as well. Trump is really getting on their case because he wants them to fucking actually, cut the damn fucking rates. No, it's like, it seems like it's almost like politics that they're not cutting the rates right now, because there really is no other logical conclusion here. And so looking at the market, it has been kind of retracing, but that's normal when we're having, Bitcoin just hit an all-time high, like 2 weeks ago, not even 2 weeks ago, right?
Last week. It was literally last week.
Yeah, last week.
Yeah.
Oh yeah, that's right. On the show. That's right. Yeah, that's right. Their second all-time high.
All-time high in 5 minutes.
That's right. Shout out to Ken Rose, gifted 1 membership to somebody in the chat. Appreciate you, brother. And he says a $2 super chat with a thumbs up. Ken Rose, thank you very much, my friend. You know, I'm gonna share something from the Kobeissi letter, and this is regarding what happened today. So take a look here. The Fed can only justify rate cuts with one data point: the labor market, which unfortunately has been tanking in the United States, especially with the recent redoing of the numbers and finding out that there have been less jobs added to the economy. But the Fed just said they see inflation risk outweighing employment risk in the Fed minutes. As we saw in December 2024, the Fed cut points by 50 basis points and immediately blamed the labor market. If the Fed is using inflation as a gauge for rate cuts, then rate cuts are nowhere near. Core CPI inflation is back above 3%, and PPI inflation has just jumped to 0.09%, the biggest jump in 3+ years. That said, the last Fed meeting happened before the last job reports. Regardless, today's Fed meetings were a major blow to the Fed pivot camp. Powell appears ready to hold rates steady if he feels necessary. The September jobs report will decide everything. I don't think that decides everything. I think they've already made up their mind. And then if you look at, like, for example, Polymarket, for example, which is a great prediction tool, the percentage of them believing that we're going to get rate cuts, it has taken a little bit of a dip recently. We're down to 67%, but previously, about last week, we had about an 80% guarantee. So it just shows you how quickly things can change. But I do think that they are potentially playing politics, and the predictions for October is also a 25 basis points cut. So my biggest thing is we got to keep an eye on this stuff every single day, because last week we're in mania. This week people are depressed. They're going back to McDonald's. They're working. You know, it's just stressful. And then, you know, October and November are, statistically speaking, the two most bullish months in crypto history. So we are heading into, like, you know, historically good times. That being said, we all know Donald Trump, but his favorite person to talk about is himself. And he loves to brag and he loves to market about how great of a president he is. So if he's in bed with those crypto people, they're making money. And then you got to read the tea leaves. You got to read the air. You know, Coinbase tweeted out, "Are you ready for alt season?" That's insane. Basically tweeting out to the normies, "Are you ready to lose all your money?" You know, and so there's a lot to be looking at right now. Real quick too, I want to just point out some quick things, and I'll review the ETFs and we'll be done. I'm going to be keeping it short and sweet here for you boys this week. Take a look here. So this is just a meme coin. I know meme coins are dangerous and stuff like that, but you know, I just want to point out that this meme coin troll has been chugging along. Okay, just take a real quick look here. So its inception was probably around the 20th of July, and here we are. So it went from a 17 million market cap to today, 1 month later, $217 million. It's been holding steady over the past 7 days. And as this is the monthly chart, you can see this as well. So when you do find these gems, you know, you could ride these up pretty hardcore, but you got to know everything comes to an end. And a meme coin named Troll, I don't know, bro. I'm a little sketched out about that personally.
Future of finance. What are you talking about?
It is the future of finance. So there's that. Let's take a look real quick at the ETF numbers, because they have been kind of not necessarily performing the way we wanted to. First, we'll look at Bitcoin. So the last show we had was on the 13th, all-time high. IBIT is the one you want to be paying attention to. That's BlackRock. They run the world. On this day, not really much inflows. And then the very next day, $500 million went in 6 days ago, following by 114. This is, of course, by BlackRock. Everybody else was selling while BlackRock was buying. That's pretty telling, in my opinion. And then we kind of entered to the position now where we're kind of, you know, going negative on this week. Actually, all the way back to stretching to last week here. We had minus 14, minus 121 mil, minus $500 million. And then today, currently, numbers are not fully in. That is us at 95 million. But if you just look a little bit further back, look at this previously. These are actually really small numbers for the Bitcoin ETF, quite frankly. 200 million, 400 million, 178, 65, 85, 230, right? So that's that. So that's Bitcoin. Now let's take a quick look at Ethereum, which we talked about last week, was going off the rails. So quite the different story. Again, the one you want to keep an eye on is ETH. That is BlackRock. And if you just look at what they were doing last week, 338 million, half a billion, 318 million, 600 million, 254 million, 100 million. Just looking at these Ethereum numbers is crazy, right? $9 billion between this time here, which is July 23rd to August 6th, $9 billion. Okay. So these people are not making mistakes. Okay. These people don't make mistakes. And that being said, there's so much money going into Ethereum. And remember, BlackRock is not trying to scalp like a week worth of money. They play big, they play long, and they play for big profits. And they run the market, they run the world. So you got to look at the ETFs as kind of like a window into what exactly is going on with everybody. So sometimes, and here's the truth about understanding investment, okay? Things take time, and you got to be patient. And like, for example, now, people are so addicted to crypto, they treat it like gambling to be, quite frankly, the average person, and rushing in and out plays and stuff. You're most likely going to trade your bag down to zero. You got to have a strategy. You got to have conviction in your strategy, and you need to have an exit point. Like Elias was saying, that's what we're talking to you guys this week. We're saying basically November 1st onwards, you're gambling. We're going to be here. We're going to be monitoring everything and showing you guys what's up. And yeah, Benjamin's in the chat and he says they don't call it October for nothing. Exactly. So the biggest thing, I want to ask this for you guys in closing, and this is just me, right? So obviously in 2024, November, Trump won. Crazy. We blew through 70K. We blew through 80K. We blew through 90K. We had a little bit of resistance. And then early December, we got 100K. Do you think we need some kind of narrative? Could it be the Ukraine war ending? Because it seemed to be coming towards, there's more progress under this administration than there was the previous one. Do you guys think that we need, because in 2021, nobody even thought the November top was the top. Everybody's like, it's still going. It's going 100K, 100K. And we bled out until like the next year, until June. What are your thoughts?
We need something, but it doesn't. We can only speculate what that is, but it will be something. I remember like a couple of years ago on the show, we were like, "Oh, is the ETFs going to be the big thing that causes all the craziness?" And my opinion then, same as today, is, well, something needs to, and the ETFs are looking like a very strong contender for that. So something's going to happen. Maybe it's the rate cut. Maybe it's the end of the war. Maybe it's something. I go, if the top is in now, and we're just going to go down now, then that means World War III is going to kick off in the next couple of weeks. Like, it's just going to just come in and then everything's fucked. So because there's nothing to say. There's nothing anywhere that says that this is anything but we're on schedule as regular programming. So something will appear, but whatever it is, I can't. It's like kind of almost not even relevant. It's just something must in order to give us that crazy push. So something will. Basically, would be nice if things got a bit more chill, but it's something.
Yeah, and we have so many options. Like just September 1st, we have potentially like the pension funds getting in. They are airing or floating numbers on socials like, yeah, we'll go in with even 2%, which if you look at the trillions of dollars pension funds are managing, that would be like explosive for Bitcoin. Then you have all the treasury companies, like the one has the ticker XXI, like it's 21 million capital, I think.
Mm-hmm.
They are already listed as a ticker on some bigger exchange, and they should be going live with the legislation starting on September 1st. And their goal is to replace MicroStrategy as the #1 Bitcoin holding treasury company. And they want to buy 1 million Bitcoin. That's their goal, basically. And they want to start with something crazy like 50K Bitcoin per month, if I remember correctly. And behind them is Bitfinex with iFinex and the whole Tether USDT cabal. And they also have SoftBank and the whole SoftBank group behind them. So they have a lot of capital. And if they actually pull the trigger, they could really pump up Bitcoin prices, which would most likely trickle down into other assets. If like Bitcoin holders take profits and try to make another 2 to 5x with smaller cap coins. So that's something I put a lot of hopes in. I don't calculate this in anywhere because I just want to minimize risk with the 170K target and everything. But if that happens, just based on the numbers, we could go 250K and up. How likely this is, I have no idea, but I'll be happy to see it happen.
Yeah. Well, fucking shit. Hold up, boys. Something just hit my desk right now. I think Kanye West just dropped his coin 9 minutes ago. Hold on. What the fuck? I got to retweet this to pull this up. Hold on. Is this happening? Because that's crazy. It was just that it came out 9 minutes ago. Hold on. Give me 1 second. I just retweeted it. All this man did was retweet it and put out the. Okay, let's do a live dive. I hope no fucking big black naked lady pops up when I click on this, but this is it. Yeezy money is here. A new economy built on chain. Buy, sell, send. Yeezy is a concept to put you in control, free from centralized authority. Contract address. Here, let me put the contract address in there for you guys to check it out on the back end, boys. That's pretty hot. Let's see what's going on right now. I'll drop it for you guys in the chat too. You guys can do your research. But oh, what the fuck? What is this? Got to connect your wallet. Wow, that's crazy. Let me do some research real quick. Let me pull this up to.
We're all trying.
We've been waiting for this all year. Yeah. Let's see.
Solana. All right. It's on the Solana.
It's on Solana, and it's people are buying. Holy shit! You can see on the chain. Look at this, guys. I'll show you guys chat. This is how fast things move with crypto, boys. Look at this. This is SolScan. People are, yeah, bro. Look at this. I think these are all buy orders. That's pretty crazy. Holy shit! Let me pull this up on Bird Eye. Let's see what we got going on here. Yep. And you can see something right here. Off to the races. Damn, it's already pumping. Look at this.
Hilarious. How long do you reckon it'll last for? You know,
$1.38. It's been out. I'll go to the 1 minute chart. We'll see.
Hey, you reckon we'll get 3 days out of this one?
It's been going for. I think this is gonna pump, bro.
100% allocation. This is it. No. Okay, but it's one of those. It's worth throwing something.
Wow. There it is, live. Yeezy coin. Oh boy. Currently, the liquidity. It says the market cap is 1.37 billion. That can't be right.
Oh, it's because there's. I hopped on Bubble Maps. There's one entity that has. I think it's just the contract, but it's got 90% of the supply.
Wow.
So there's 90% is locked up, or something. This is why you got to look into these things. Okay, yeah. So who owns this? Been 6,400 buys to 804 sales.
Hold on, yeah, I'm gonna pull up the Bubble Maps too to see that. Bubblemaps.io, right?
Yep. But then they've released the V2 one, so you might need to make an account. $108 million of liquidity, which is quite crazy.
That's a lot. Oh, you do have to make an account. That is so gay. Can you screen share?
Yeah. Let's go.
It went from 240 million to 1 billion in 5 minutes. So yeah, there's the Bubble Maps.
Yeah, so we got this thing here that's got 90%. That's they're assuming it's a contract. And then the
ticker should be N2O.
So that should be fine.
So this is what we're talking about. Like, when you guys, so like, for example, not financial advice, but this is an opportunity for certain people. Like if this pans out, let's go back. Let's go to the 1 minute chart. It's consolidating. It's going to break out and go to 10 billion. Well, the market caps went to 1.545 bill. So this is this seems to be moving. It's 10 o'clock in America, Eastern Standard Time. Very interesting. And I just love that, like, you know, it just shows you how people really just don't pay attention to anything. So buy, send, sell. Easy is a concept to put you in control, free from centralized authority. Trade easy now. Trade easy on mobile. Public supply 20%, liquidity 10%. What is easy? What is Yay Pay? What is Yeezy Card? How can I? Nothing. Please review and report disclosure regarding Yeezy here. No one will read this.
Yeezy Investments Limited.
So here's what you guys do: you copy this, right, and then you go to AI and you type it in, and they say, "Hey, what does this mean?" This mean it's a new coin dropped by Kanye West. So take a look here. Okay, what you pasted the terms and condition of a new token called Yeezy connected to Kanye West's Yeezy brand. Here's the key meaning of when broken down. Is a Solana based, and again, this is like I just showed you. Troll is also a Solana based crypto token, right? Token is branded as Yeezy, tied to Kanye West and Investments LLC. Let's see. Miners can't use it. People sanction anyone in the U.S. international blacklists. They call Yeezy fungible cryptographic asset, not an investment contract. The purpose is framed as cultural, ideological support of Kanye ideas, artwork. It's merchant token form, not a stock or financial product. This is basically what Trump did. This is Kanye West dropping Yeezy brand token Solana. They legally covered themselves by saying it's just art, fan support, not an investment. If you buy it, you're green. You can't sue them in big group if it crashes. That's not a security or investment vehicle. So, pretty interesting.
It's like 99% a scam, but it's one of those like, oh, you can make some money off it for a day, but you know.
Hey, it just went from $1.30
Well, it's
to
38, but we looked at it at 64. Yeah.
It's moved. I'm telling you, this might move. This might move. Oh, that's too rich for my blood, though. I'm good. I'm allocated. But hey, guys, you saw it here first, man. So keep an eye on things. We'll be back next week. Watch that. That's a perfect example of what you can monitor a meme coin. Don't buy if you really don't have a solid plan. You know, especially if you're gonna have $1,000 in your portfolio. But yeah, we'll do some digging and we'll get back to you guys next week on this with the report. But thanks for watching. We'll see you next time. Peace out.